Well, now we'll discuss few important items in trial balance. The first is loose tools. Well, loose tools are spare parts, dies and molds of a machinery. If we make it simple, they are hammers, nails, screwdrivers, drill machine, pliers, etc. These small assets of the business are put under a common head which is known as loose tools. They are assets for the business and they are shown on debit side of trial balance. The next item is dead stock. Well, dead stock means if any goods are left unsold at warehouse, our store, maybe because the demand has decreased of our product. There can be any reason, say there was a change in technology and because of that the demand of our existing goods is gone and these goods are now not getting sold in the market, so they are piling up in the warehouse. This stock which is unsold, guys, they are known as dead stock. Basically, dead stock is also a current asset and in trial balance it is recorded on debit side. The next item is royalty. Now guys, royalty is very important term. Let us understand the concept of royalty by different examples. Say guys, our firm is using the designs, technical know-how of other party and we are producing the goods. So we have to pay a fixed amount, certain percentage to that party, and this amount which we are paying is known as a royalty. We'll take another example, guys. Say we are extracting minerals, oil, coal from the land which is owned by government. Now since we are using the land which is owned by the government, from that we are extracting these minerals, oil and coal, we have to pay a certain fixed amount, say a certain percentage of each extraction to government. So guys, this amount which we pay is known as royalty. We'll take one more example. Say there is one author who has written a book. Now this book he gives to publishing company and publishing company sells this book in the market. From the amount realized from sale, the publishing company pays a fixed amount to the author and this amount is known as royalty. So royalty is the expense of the firm and it is recorded on the debit side of trial balance. Now we'll discuss a group of 4 items: provident fund investments, contribution to provident fund and interest received on provident fund investments. Say there is one company, it pays a certain amount of salary to employees. Now from that salary, it deducts a certain amount which goes towards the provident fund of employees. When the employees retire, they get an accumulated amount on retirement which is known as provident fund. Well, even the company, the employer contributes a certain amount towards provident fund of employees, which is known as contribution to provident fund. Now the company does the investments out of this provident fund amount which it gets from the employees. Say the company will purchase government bonds, say the company purchase RBI bonds, where the company receives a fixed amount of interest on that. This interest is known as interest received on provident fund investments. So guys, provident fund is a liability of the company. On retirement of employees, the company has to pay this amount. So provident fund is a liability of the company. It comes on trial balance credit side. Well, the investments which are done by the company out of this provident fund, they are termed as provident fund investments. They are assets of the company and they are shown as a debit item in trial balance. Well, contribution which the company, employer does on behalf of employee towards provident fund. It is an expense of the firm, company. So it is on a debit side of a trial balance. Finally, interest which is received on provident fund investments by the company, it is a liability of the company. Along with the amount of provident fund, the company also has to pass on this interest to the employees. So that way it becomes a liability of the company, and interest on provident fund investments is recorded on the credit side of trial balance. Well, the next item is general reserve, bad debts reserve, any other reserve if it is given in trial balance. Remember students, reserves are always created out of profits. They are certain amount kept aside out of profits. So any reserve, whether it is a general reserve, bad debts reserve, it will come on credit side of trial balance since they are part of profits, they are income. Well, in the question sometimes they give returns inward, returns outward. Well, returns inward, they are sales returns. Return outwards, they are purchases returns. Instead of returns inward, returns outward, sometimes they may use the terms goods return debit and goods return credit. Well, the term debit and credit they have used for what? The goods returns debit means we have issued a debit note, guys, and goods returns credit. So the term credit means we have issued a credit note. Well, goods returns debit, that means we have issued a debit note and they are purchase returns for us. Similarly, guys, goods returns credit means we have issued a credit note and they are sales returns for us.